Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 28th of December 2020. And as we were preparing today's video on gold and silver price forecasts, we came across two interesting articles suggesting that one should consider differing asset class investments for 2021. Now, whilst we don't wholeheartedly agree with those predictions or recommendations, we thought we should at least draw your attention to them. So here goes. Firstly, just a quick shout out to the videos we produced over the weekend. On Saturday, our gold and silver weekly update for the week ending the 24th of December. And yesterday, Bitcoin versus Gold and Silver episode 4, Scaramucci launches Bitcoin Fund. And we've placed links to both of these below. Yes, as mentioned, we were scanning the financial pages this morning to see what breaking news there has been. And we took a quick look at gold and silver prices and can see that currently gold is down $3 on the day at $1,877, though it did initially spike up to $1,900 at 2:07 a.m. GMT. And silver is still currently up a healthy 49 cents at $26.33, though it too spiked just before 2 a.m. GMT to $26.79. But what is trending in the mainstream media is JP Morgan's prediction that Bitcoin can rise from its current $26,500 to as high as $650,000 by the end of 2022 or early 2023. We can also see that quite an established CFA wrote just before Christmas, but it was published by Yahoo Finance on Christmas Day, that he would not be investing in gold or Bitcoin in 2021, but in the S&P 500 instead, and the reasons why. So let's take a brief look at both of these articles. They're quite short, and we shall comment on them immediately afterwards. The Express article online, dated 27th of December 2020, but that was quite late last night. Headline: Bitcoin price to grow 10 times by end of 2022, as JP Morgan estimates value of $650,000. Bitcoin value will increase tenfold, a top US venture capital investor has claimed, as international investment bank JP Morgan estimates the price of each coin could soar to $650,000 or £485,763. Tim Draper said the cryptocurrency's value will have increased 10 times by the end of 2022. He tweeted, Bitcoin will increase 10 times from here by end of 2022 or early 2023. Speaking to Express.co.uk, Max Kaiser said the prediction means a price target of $260,000 for Bitcoin. A report by JP Morgan estimated the eventual worth of each Bitcoin would be $650,000. The investment bank sees a pattern of increased investments from financial institutions following the likes of MassMutual and MicroStrategy in getting exposure to Bitcoin. A report by JP Morgan stated alternative currencies such as gold and Bitcoin have been the main beneficiaries of the pandemic in relative terms, growing their assets for investment purposes by 27% and 227% respectively. Speaking to Daniela Cambone on the Stansberry Research podcast, Mark Kaiser gave his opinion of who was behind the latest Bitcoin rally. He said, what Michael Saylor and possibly Elon Musk and others have figured out is that they have the Federal Reserve Bank and other central banks in a very precarious position. This is because these banks have artificially pushed interest rates down to these extraordinarily low levels to almost zero. If they can borrow cheap and buy Bitcoin, they are in a position to make a speculator attack on the Federal Reserve. Make no mistake about this, Michael Saylor and the Bitcoiners are attacking the Federal Reserve Bank and the global central banking system. This is why we could see Bitcoin trade at $200,000 or $300,000 pretty quickly. Mr. Kaiser said that the only way for central banks to defend themselves against this speculative attack was to raise interest rates. This is for investors the multi-trillion bet on Bitcoin, said Mr. Kaiser. He added that as long as interest rates keep being lowered, then this Bitcoin bet is an asymmetric trade, and it's got almost virtually no top. However, US stockbroker and financial commentator Peter Schiff has remained hostile to Bitcoin's potential and warned against investing in the world's preeminent cryptocurrency. Today he tweeted, "In 100 years, will Bitcoin be remembered as the new Ponzi? Maybe instead of being conned, people will be Bitcoined instead." Yahoo Finance article dated Friday 25th December 2020, Christmas Day, by Edward Sheldon CFA. Headline: Forget gold and Bitcoin. Here's how I'd invest £10,000 in 2021. Gold and Bitcoin have performed well in 2020. As I write this, shortly before Christmas, gold is up almost 25% for the year. Bitcoin, meanwhile, is up an impressive 220% year to date. These are not assets I'd invest £10,000 in next year, however. Below I'll explain why. I'll also discuss where I'll be investing my own money in 2021. Gold is unpredictable. Gold performed well in 2020 for two main reasons. First, it's seen as a hedge against uncertainty. With the coronavirus causing unprecedented levels of economic uncertainty, demand for the commodity rose. Second, it's seen as a store of value. With central banks issuing enormous amounts of stimulus this year, investors turn to gold to protect their wealth. Looking at the economic environment today, I think gold could keep rising in 2021. The thing is, however, it could just as easily fall. If vaccines are rolled out successfully and optimism towards the global economy remains high, gold could struggle. This brings me to my main issue with gold. It's notoriously unpredictable. This lack of predictability makes it unappealing as a long-term investment to me. Bitcoin is highly volatile. Turning to Bitcoin, it's even more unpredictable. This is an asset that can swing 10 to 20% in value in a single day for no real reason. This volatility makes it a highly speculative investment to my mind. While crypto bulls believe Bitcoin is the currency of the future, I personally don't think it will ever be accepted as a proper currency. The reason I say this is that it's just too volatile. Would you want to be paid your salary in a currency that swings 20% in value in a day? I know I wouldn't. It's worth pointing out that the last time Bitcoin traded near $20,000 in late 2017, it lost 80% of its value of the next year or so. Many investors lost a lot of money. Given its volatile track record, I'll be steering clear of the cryptocurrency in 2021. Where I'd invest £10,000 in 2021. So, where would I invest £10,000? Stocks, of course. Compared to gold and Bitcoin, stocks are far more of a proven wealth generator. Just look at the long-term performance of the United States S&P 500 index. Since its inception in 1926, it has generated a return of about 10% per annum. Another thing I like about stocks is that, compared to assets such as gold and Bitcoin, they're far more predictable. Sure, stocks are volatile in the short term. However, if you invest in high-quality growing businesses, there's a good chance you'll generate strong returns in the long term. That's because, as companies grow over time, their share price tends to rise. All there is to investing is picking good stocks at good times and staying with them as long as they remain good companies, says legendary investor Warren Buffett. Investing in stocks worked well for me in 2020. Throughout the year, I had nearly 10 stocks generate returns of 50% or more. Some of my best performing stocks returned nearly 200%. Looking ahead to 2021, I see no reason to change my investment strategy. The post Forget Gold and Bitcoin, here's how I'd invest £10,000 in 2021 appeared first on the Motley Fool UK. So what is our take on these two articles? Well, on Bitcoin, as regular listeners know, we're publishing each Sunday a Bitcoin series of episodes, and we do not wish to prejudge the outcome of that series too early. But that said, of course anything in the cryptocurrency world is possible. Who would have believed that when Bitcoin reached $18,000 a little over a month ago, it would now be worth $26,500? And from something that started at $300 some 10 years ago, now worth $26,500, is not beyond the realm of possibility of it reaching exorbitant levels with a number of serious funds, including the one we mentioned yesterday, Scaramucci Skybridge, setting up its own Bitcoin fund, investing in it. And naturally, this will undoubtedly drive prices higher. Now, we have to admit, $650,000, whilst not impossible, seems a little heady to us, but a tenfold increase in a couple of years is certainly possible. Now, what about the S&P 500 over gold or silver? Well, we would not have set up a channel talking about gold and silver if we did not have confidence in them, either as a store of value or a hedge against inflation or currency devaluation, or as an appropriate asset class to invest in. But that said, it would also make sense to foresee that with Biden likely to be president on January the 20th, not a foregone conclusion because of what could happen in Congress on the 6th of this month, of January, and more stimulus being injected into the economy and a move ever closer to MMT economics, modern monetary theory, if we're not already there, that is, equity markets at least over the course of the next 12 months, and we suspect certainly in the first half, should do extremely well, even though they are already close to all-time highs. Our approach, though, to any form of investment is more cautious, primarily based on our background, but also where we are in our state of life. We've always stated that a sensible investor will hold a mixture of asset classes and never commit to only one. Yes, you can theoretically, and it's been done, become extremely wealthy, devoting all of your wealth into one asset class. If you did that with Bitcoin 10 years ago, no doubt you'd be multi-millionaire, if not a billionaire today. But doing so could also make you extremely poor as well. For some, that is the challenge, and they see the risk worth taking. That's fair enough, but for most people, they just want a reasonable return on their investments with a little excitement from time to time. So logic dictates that you should have an interest in each, perhaps, of these areas. Not necessarily the same proportion invested in each, but certainly a 5 to 10% in some, and perhaps a 20% exposure in others. Not forgetting, of course, you still have bonds, treasuries, property, and even art and antiques to consider, and for some, particularly YouTubers, Rolex or high-end watches, for example, though we suspect that even that bubble will burst shortly. Now, we shall continue this week with other organizations' gold and silver price forecasts, culminating in ours for 2021. But what do you think on what we've read today? Do you agree? Is Bitcoin going to $650,000? And if it is, do you care? If not, where do you see it ending up? Perhaps by the end of 2021, 22, and even 23. And what about the argument over the S&P 500? Are shares going to go higher in 2021, assuming a Biden presidency, or even assuming a continuation of the Trump presidency? We'd be interested in your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel. Not forgetting, of course, to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.